Hello everyone, thank you for joining us today and welcome to this presentation on where to find trending trade setups. Welcome, my name is Stephen Primo. I am the president and founder of Specialist Trading, and today we have a really great webinar because I'm going to show you a technique that you can start using as early as tomorrow, and it really shows you where to find those really great setups within a trend. Once again, my name is Stephen Primo. I'm the president and founder of Specialist Trading. If you're not familiar with what we do, or if you've never seen any of our presentations before, just let me share with you that we are first and foremost an educational company. I know a lot of presenters out there, or a lot of different webinars are always trying to get you to be in sync or to purchase their program or their system. We are all about educating you with all the tips and techniques I've accumulated in my trading career so that you can ultimately rely on your own trading decisions. It's my opinion that that's the only way, the absolutely only way that you will become consistent in trading the markets, if you rely on making your own trading decisions and you have it based off some sound fundamental education and techniques that have worked through and been tested through time. I say this because I've been trading for 38 years. I started trading on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years. 9 of them I was a specialist. That's where we get the name Specialist Trading. And a specialist was a trader who made markets in roughly 35 to 50 stocks. So I made markets on the floor. I made markets during the crash of 1987 and the bull market that followed. So I know what works in terms of consistency and I know what doesn't. I've seen traders make hundreds of thousands, if not millions of dollars in a relatively short time, and I've seen those same traders lose it all as well. And the only thing I've really found that adds to consistency is taking charge of your own trading, is being responsible for your own decisions. And the trouble is that most traders do the opposite. We want to purchase that perfect system or that perfect method or that perfect technique that's going to give us all the answers. And there really isn't anything like that out there, because the only way I found out that through my 38 years is the way to become consistent is to use this information and then make your own decisions and be responsible for your own trading. That's how you'll become a part of the process. And that's what we do at Specialist Trading. So once again, I'm going to give you some valuable information today, how you can trade in sync with the trend. But before we do, we're required to show you this disclaimer, so please take a moment to view it. I'm going to show you a lot of performance results in all markets and time frames using this particular technique with the trend. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And so as you're taking a moment to view our required disclaimer, I'd also just like to take this second to invite each and every one of you to follow us on Twitter. You may want to write down, that's our handle right there, the abbreviation for Specialist Trading. It's at SPCLST. TRADG. I post information on a daily basis. Sometimes I post actual signals that have been generated by our strategies, other times just daily financial wisdom, but there's a lot of great free information there, although it is rather limited. So if you'd like to get some more detailed information, videos, and a lot more trading lessons, my sister site, which is Pro Trader Strategies, they put together this webinar for us today. They've created a Facebook page. So you can follow them on Facebook, protraderstrategies.com, and there's a lot more free information on what we do and a lot more lessons and videos to find out more about Pro Trader Strategies, as well as my teaching with Specialist Trading. Okay, so once again, we are an educational company, and what I basically do is just teach all of my students and my members the same things that I was taught when I first started trading and the same things that I use currently in my own personal trading. And the reason why I do that is because I started out just like everyone else. I started using all the same techniques, reading all the books, going to all the seminars, and doing everything that you were supposed to do. And guess what? I couldn't make a dime. My first 2 years of trading on the floor were terrible because I was just basically trading water, and that was the best I was doing. So I really learned some valuable lessons my first year or two on the floor that were ultimately able to turn my trading around. And I got all of this information from my mentors, who basically taught me the same way I teach my students. So this is what I learned trading on the floor of the exchange, because once again, I was trading just like everybody else. I was basically trying to pick tops and bottoms. I was using Fibonacci. I was looking at overbought, oversold conditions, and I was trying to just guess what the market was going to do. And so what my mentors taught me was basically Trading 101. They said, Steve, listen, get rid of all those useless indicators, all the noise and things you're relying on, such as news or all this inside information, volume, and what the institutions are doing. It really doesn't matter. You should really take those things with a grain of salt. The only thing we're supposed to be doing as traders is to trade with a trend, because you will increase your odds for success by trading in sync with the trend. So I mean, as we see here, it's trading 101. Everyone knows this, but the reason why most traders fail at this aspect is because everyone has a different idea of what the trend is. I'm sure if you've gone to some presentation before, they will tell you that the only way you can find out what the trend is by using certain convoluted indicators. Others will tell you, no, you've got to look at specific price bar patterns, possibly higher highs, or lower lows, lower highs, depending on which side of the market you're on. Whereas others will still say, no, all you need is a basic is a moving average, and that will tell you what to do. And then look at the higher time frame, and that tells you what the lower time frame is. Now, these are all very valid, simple ways to discern what the trend is, but they're not very consistent. They're good for generating what the overall trend should be. But in terms of really finding out what we want to be doing right now in sync with the market to give us the highest odds for success, they're a little bit faulty. They fall far short of really being, consistent tools. Let me show you what I mean here. Let's look at this older chart. And by the way, I'm going to start out looking at some older charts just for educational purposes, but then I'll show you a chart using the techniques that I'm going to be teaching you today that is as recent as this morning. Okay, but let's look at this older chart of HRB. As we see here, the stock shot up in February, and so right there you could say, well, maybe we're in an uptrend. I mean, we did go up rather quickly, rather swiftly, and maybe you're looking at volume or specific indicators, but you just want to make sure, so you give it a little bit more time, and then we're still going up a week or two later, so then you say, okay, you know what, I'm jumping in. We are in a solid uptrend, and we're most likely building some type of really nice move to the upside. So I'm going to buy right here. Maybe you think this is some type of pullback, or maybe you're building some type of a channel or some type of a pennant here. So you jump in to buy, and then look what happens. Okay, does that look familiar to anybody? We go straight down. So what happened to all of this? Okay, we waited, we wanted to be conservative, and it didn't work out. It quickly changed on a dime. Or what about this? This is a Canadian dollar. Let's say you were following this back in April, and it's falling out of bed. It's going down hundreds of pips in just a relatively short time, so it's got to be in a downtrend, right? But just to play it on the safe side, you give it a few more weeks, and now you're almost certain you're in a downtrend. Let's say perhaps you even got short somewhere around here, and you're looking pretty good. You've got a nice profit under your belt, so you feel confident you're in sync with the trend. And then all of a sudden, one day it just snaps up, and you give everything back. You've lost your profits, and now we're going the opposite direction, okay? Once again, look familiar to anybody. Lastly, let's say you're using some type of moving average and crossover, and it's obviously crossed above. This is a one tick, or I should say a 1 point range bar on the E-mini. This was just last week, I believe. And let's say the market just takes off and you feel, well, I'm trading intraday, and the short-term moving averages I'm looking at, let's say I'm looking at a 13-period exponential, maybe a 20-period simple moving average, and they crossed over, and we definitely are in a uptrend, but you just want to play it safe, so you wait a little bit longer, and lo and behold, you've got this high level consolidation. Maybe it's going to break out, so you decide to jump on in, and look what happens. Okay, so using those other tools such as indicators, such as price patterns, those are fine and well, they will work, but not on a very consistent basis. They're better used as overall general tools, okay? We need something a little bit more fine-tuned in order to trade in sync with the trend to give us those highest probability setups. Now, what we need is an early trend detector. This is something telling us in advance of the other techniques, in advance of the other styles of formulating what the trend is, well before possibly some news event comes out that a trend most likely has begun. All right. Now, some 38 years ago, I was introduced to this on the floor. You've heard me speak about this before. This is one of our most popular trend identifying tools, if not the most popular at specialist trading. It's the PET-D. And what it is a proprietary color bar algorithm, a simple formula that is proprietary, we keep in-house, but we have formulated into a color bar algorithm. So all you have to do is plot the PET-D, And if you see a series of green bars, you're in an uptrend. There's nothing to figure out. There's nothing to calculate. There's nothing to come up with some type of convoluted plan. It's just right there for you. If you see a series of red bars, you're in a downtrend. That's it. The bars will never repaint, okay? They won't be closing red and then somewhere in the future they've changed to green. They will always stay the same. Once the bar closes, let's say you're looking at a 5-minute bar and it closes that 5-minute time frame at red, it will stay red, all right, forever. So let's look back at those examples again. Here's that example in HRB where we were going up and then we quickly turned on a dime. So, what if we had been long somewhere around here, and then what if we could have some type of early trend detection that we were going to be going into a downtrend and at least get us out somewhere at these levels before we fell out of bed? Well, let's apply the PET D. Remember, green is an uptrend, red is signaling for a downtrend. Once we apply that, we see that the colors of the bars automatically change. Now, the PET D, well before the stock started to go up, was already coloring the bars green. And then well before it started to fall out of bed, it was giving you advanced warning that most likely we are in a downtrend. Even though there was no hint or indication of it in the price, because for all intents and purposes, we could have just been consolidating before we went up even higher. But the PET D is really a translator. What it is it is listening to the market in a way that we can't, and then it translates for us in this color barcode, telling us what the market is trying to say. It's as if the market speaks another language. And we haven't got to the level yet where we understand what it's saying. So all we need is an interpreter, someone to interpret for us. And through this color algorithm, it's interpreting whether the market is saying it wants to go higher or the market is saying it wants to go lower. And it's that simple. All our job is as traders is to listen to what the market wants to do, and then we jump on board. All right? We don't have to make it more complicated than that. We don't have to try and figure out news events. We don't have to figure out what's going on the other side of the world. We don't have to figure out what the jobless claims mean or what some specific convoluted indicators are telling us. All we have to do is listen to our translator here, which is the PET D. Now, if we look at the Canadian dollar, once again, we were sure this was in a very strong downtrend because of the fierce downside move, but then it just changed on a dime. Well, if we apply the PET D, we see that it was telling us well before the currency pair fell out of bed that we were already in a downtrend. It was coloring the bars red. And let's say you had gotten into a position. Well, right here, you could have stopped yourself out or taken some profits on this first green bar, and then look what happened. All right, it was telling you well before the move up, translating that the market wanted to go higher. Now, if we go on the intraday basis, we can look at the E-mini. Here's that 1-point range chart. Once again, this looked as if it was having a very strong move upward. It even looked like it was consolidating in a pennant before it was going to go higher. But then it quickly changed on a dime and started a swift move to the downside. Is there any way we could have known that we were going to be changing trends that suddenly? Sure. You add the PET D, and well before the trend began, the PET D was already telling you we're in an uptrend. All right, so you could have ridden it all the way up here, and then well before we fell out of bed, you could have exited, and then, if you were so inclined, gone short. So you see, it's a great translator for telling us exactly what the market wants to do. But so far, all we've done is just listen to what the market wants to do. Remember, that's phase one. The second phase of trading is we have to jump on board. And we need a little structure. We can't just buy at the market because we need a little bit, we need a bit more planning involved. We can't just, use discretion and throw caution to the wind and saying, well, okay, we're just going to buy. There are better ways to fine tune our entries, better ways to trade. So here's what I'm going to do today. I'm going to share with you this technique that I learned on the floor. I'm sure many of you have even heard of me speak about it before on presentations and webinars. It's extremely simple. And I'm sure many of you have probably read about it or seen it. It's nothing I've made up, but it works tremendously with the PET D. The reason why most people have read about this and then discarded it is because it's not used in terms of the correct way, which is to trade it with the trend. So the beauty of the PET D is that it tells you which direction you should be trading. That's all it does. It's not a trading system. It does not give you entries and exits. It's simply a trend identifier, an early warning system telling you what the trend is going to be most likely. And once you know the trend, you can apply any technique any strategy or any system to that direction. So it doesn't even have to be one of mine. It could be something that you feel fairly comfortable with, maybe even a strategy or a system that you've formulated yourself. But if you really want to increase your odds for success, you know you have to trade in sync with the trend. And if you can apply whatever you're trading currently with the PET D, we really feel it will increase your odds tremendously. So here's the trading technique I'm going to be sharing with you today. This is simply a technique. It's not a trading strategy. It's just a technique that really fine-tunes these high probability entry points. All right, so here are the requirements for this particular technique. Only two. Obviously, you're going to need the PET D because we're going to be trading in sync with the trend. Now, you can trade this technique with any way to find out what the trend is, but you won't have these high levels of consistency as if you were trading with the PET D. So we're going to be using the PET D, obviously, and we're going to be looking at an inside day bar pattern. I'm sure many of you have heard or seen this or even trade with this particular bar pattern, but for those of you who are not familiar with this, let's just do a brief refresher course. Here's what the bar pattern is. It's a 2-bar pattern. It doesn't matter if it's on a 5-minute time frame, so even though it's called inside day pattern, you don't have to be looking at daily bars. You can be looking at 5-minute bars, you can look at tick charts, you can look at monthly bars, and I'm going to show you examples in all these different time frames. But it's just 2 bars of whatever the time frame you're looking at. Now, inside days are days where the chart bar has a lower high and a higher low than that of the previous day. So if we look at the 2-bar pattern right here, we see here that here's bar number 1, and here's bar number 2, all right, the 2-bar pattern. Once again, these could be 5-minute bars, these could be monthly bars. It would actually make no difference. But you simply want to take the range, that means the extreme high to the extreme low. If you're looking at candlesticks, that would be the high of the wick to the bottom, the low of the wick. And then day number 2's range has to be inside of that. Now, you know, for the best examples, for the ideal examples, you want the range to be inside, meaning that this high is lower than this high, and this bar number 2's low is higher than this low. But I'm going to show you that the actual rule is a little bit too idealistic because they could even be matching. So in other words, you could have both at the same high and both at the same low, and bar 2 would still be inside of the previous day's range. So this is a more ideal inside day. Either one of these 2 high or lows of bar number 2 can either be matching, okay? Now, here's the buy setup we want to be looking for. We want to look for both bars, bar number 1 and bar number 2 of an inside day pattern, to be colored green. That's it. That's all we're looking for. This is your signal that a quick momentum upward move may continue. So if we look at those charts again, this is what we're looking for. It doesn't matter if all the bars prior to this were red. It doesn't matter. If these 2 bars are green, this is a very high probability entry technique for going long. Now, let's say we want to go short. Well, we're going to look for both bars of an inside day pattern to be colored red. This is your signal that quick downward momentum may continue rather soon. So here's all we're looking for. Once again, it doesn't matter if all the bars prior to this were green. As long as this 2-bar pattern, both bars are red, this is a very high probability setup to go short. And remember, this could be a 5-minute time frame, monthly, weekly, daily. It does not matter. So let's look at some stock examples to see how well this technique works. Remember, you can use this technique on virtually any method of discerning what the trend is. So if you feel very confident that the best way to find out what the trend is by moving averages, that's fine. But I can almost guarantee you that you won't get a better setup than using the PET D, because I'm going to show you some examples of show you how the PET D will get you in well before other techniques show you what the trend is, just as I showed you previously. All right, let's look at this chart in KMB. Now, obviously, someone looking at this would say, well, Steve, it's easy to see this is in an uptrend. What do we need the PET D for? You know, looking back in hindsight, yeah, sure, I would have gone long as well. All right, but what if we were back here at the beginning of October or even the end of September? How did we know at this stage of the game that we were in an uptrend? If you add the PET D, well, guess what? We were already green before we even started to have this nice upward move. So this was already giving you signals to be ready for these inside bars well before. All right, and so you didn't have to give it time for fruition. You knew well before that we were in an uptrend. Why? Because all of the bars were green. Okay, so all we have to do is look for that inside day pattern, and there were three. Here's one, here's another one, and here's another one. The entire way up, you could have been purchasing, make it a little profit, exit, purchase again, make a little profit, exit, purchase again. Or you could have just been adding to your position. It's up to you. Remember, we're just sharing with you this entry technique, a high probability entry technique. But you see how well it worked. Most of the time, the beauty of using the Pat D is it will get you in well before other trend identifying methods will. So maybe your technique for discerning the trend wouldn't have given you an indication until possibly right here. You would have missed this first setup back at roughly 112 or so, and that's a good 10 points to the upside. Oftentimes, the first setup is the best setup in terms of capturing the most points. We can use this to the downside. QCOM, Qualcomm here, we see here had a quick move downward and then quickly changed back up. So how could we have known in advance that we were going to be changing trends? You just simply add the Pat D. The Pat D, well before the stock fell out of bed here, was already red, way up here. I don't think other trend identifying methods could have told you that we were already in a downtrend. And then well before the rally started, we had a green bar telling you that most likely we've changed and the downward move has concluded. Now, once all the bars are red, the only job you have to do is look for that 2-bar inside day pattern. And look at all the chances you had to go short. Obviously, once again, the first signal is usually the best, roughly here at 62, and the stock went all the way down about 10 points down to 52. Now, once you got the first green bar, if you were still short, you would have tightened your stops or maybe exited altogether, and now you just switch sides. Now you look for long setups, and here they were. The first setup was at 56. That's a good 5 points in the next couple of weeks to the upside. How about Yahoo? Okay, Yahoo coming down in the summer was in a really strong downtrend. Once again, people looking at this would say, well, Steve, easy to see that this should have been shorted. Did you know it should have been shorted up here around 39 or 40 though? The Pet D did. The Pet D was translating what the market wanted to do, and it was telling you to sell Yahoo way up here at 40. So all you have to do now is look for the inside bar pattern, and the first one would have been the best one to take, roughly at 37, and the stock went down 10 points in the next month. Remember, we're not looking at news, we're not looking at volume, we're not looking at support and resistance. I used to trade those things, so I'm not being arrogant and condescending here and putting them down. I used to trade those things, and sure, I would make money every once in a while, but most often I would give it all back on the next trade. I'm sure a lot of you are going through the same scenario. So there's no consistency in trading those things. There are a few very good, excellent traders that are able to make a living off trading those standard techniques, but they're very few, probably 1 or 2% of all traders. The rest of us, the majority, the 98%, can't consistently make money trading those things. They're too subjective. They're too difficult to find out. But there's nothing subjective about this. This is cut and dry. If the bars are red, you're selling. You're looking for sell setups. If the bars are green, you're looking for buy setups. There's nothing to try and figure out. There's no news to calculate or anything. It's right there. And if the bars are red, you just look for inside bar patterns to go short. Okay? Here's an example in PSA coming into November of this past month. Obviously, once again, the stock's in an uptrend, but well before that move to the upside happened, we knew that we were going higher because the bars were green. So all we have to do is look for that inside day bar pattern, 2 green bars, and well back here at 210, well, that's 20 points in the next month to the upside if you had taken the first setup. Now we know this is expensive stock, but you could have easily applied options as well to this. Now, it just doesn't work on stocks. It will work on indices too. So you can use this as some type of trend identifier for the indice, for our market directional tool. I'm specifically going back to August here because I know what happened in August. Remember, we had that really strong downward move in the markets, and a lot of people were really caught off guard. A lot of people said, Steve, there's no way to make money in the markets anymore because these really strong, high-speed, trading systems and hedge fund tools, they really monopolize the market. There's no way we can get around these systems, high frequency trading. There's no way to do this. So there's no way we can trade against these big guys. And I said, that's really a victim type attitude, and we don't really preach that at Specialist Trading because everyone has the same amount of hours in the day. Everyone has the same opportunities. I don't care if you have a $2,000 account or if you have a $2 billion account. Everyone has the same probabilities. It's all relative. Now let me show you what happened here in the industrials. If you were looking at this, and I'm sure you could have played the victim and said, boy, you know, they caught me off guard with that big sell-off. There's no way a little guy like me would have known that. Okay? If you had the Pet D, trust me, you would have known. Because all you have to do is, as far back as July here, we see here that the bars were already red. So the Pet D was translating that the market was already telling us it wants to go lower. There was no reason to be long. Therefore, you would not have lost when the market fell out of bed. So once you saw that the industrials going back to July were completely red, all you have to do is look for this inside day pattern. And look at all the examples here. The market was yelling, it was screaming that it's going to be going lower. Now, so far, it hadn't kicked in yet. If we look back to August, all the way throughout August, the first couple of weeks, sure, the market was still drifting lower, but there wasn't really a strong downward move. But ultimately, around the 16th of August, it kicked in, and that's where the strong move happened. Now, sure, if you want to play the victim role, you can sit there and complain and say, boy, these hedge funds and these high-frequency trading, they control the market. There's no way I could have made money. If you remember a student of mine, you would have been at least been on the right side, or you would have been on the sideline saying, well, we're in a downtrend. I'm not going to do anything until we start to head back up. There's never a reason to feel off guard. Remember, we are trying to teach you to take control of your own trading. We're not providing you with some get-rich-quick scheme and telling you just trade this system and you'll be a multimillionaire in 5 years. We don't believe in that. We believe the only way to get consistent is by using sound tools and methods that have stood the test of time, and then learning the techniques and then being in charge of your own trading. Not relying on someone or something to tell you what to do or how to trade. You have to take control of your own trading. That should be your one goal for 2016. Okay, so you see the market fell out of bed, down 1,000 points roughly there. Now, in October, everyone was caught off guard again. Everyone thought, okay, we'll probably have a little bounce, but then I'm going to short the heck out of the markets because we're most likely going lower, okay? Well, let's see what the Pet D said. This is the index, the S&P 500 index now. Coming into October, after the strong downward move in August and September, what was the Pet D telling us? Well, initially, we were going lower. The downward move was still in place, so we're still looking to sell. But coming into October, as we can see here, we had one sell setup. Then we started to have consistent green bars. So this is telling us that the market is trying to translate through the Pet D that it's going higher. This downward move is most likely over, and we're in an uptrend. Now, most people were looking at this as just a short bounce, and they were going to short it. In fact, I spoke at a seminar in Las Vegas in October, and everyone there, all the other speakers were saying, I'm shorting this into this because we're probably going to make new lows. And when they asked me, I said, well, our primary tool, the Pet D, is telling us we're in an uptrend, so I'm just going to be buying. I'm going to be in sync with the market. So as we see here, here was our first setup. This was in the first week of October, and look what the market did, okay? We continue to go up all the way through the first week in November. And look at all the different setups here, the inside day bar patterns you could have taken advantage of. Now, I want to show you this because this happened just a week or so ago. Now, this is just the industrial index again, and we're just looking at roughly a week or two, ending here on the 10th of December. Now, someone looking at this would say, well, we're just kind of going sideways. There's no real trend. So I'm not going to do anything on this inside bar pattern. I need to see a trend in place. Well, we don't look at things that way because we have the Pet D, and all you have to do is add the Pet D, and this was on the 10th of December. We have an inside bar pattern. We simply add the Pet D, and we see that the 2-bar pattern is red. So it is completing the requirements to go short. Now we see here we had one upward green pattern, and then we follow by an inside day, but this doesn't meet the requirements. Remember, you need both of these bars to be colored red. So even though the market did go lower, this was not a valid setup. But we see here 2 days later, there is a valid setup. We have a textbook inside day. The range from top to bottom of bar number 2 is inside the range from top to bottom of bar number 1. So this would have been your sell setup here on the 10th, just a few weeks ago, and the next day the market went down 300 points. Now we're not saying you're going to sell the entire market. You could have purchased index options. You could have, if you were thinking about going short a stock, This could have been your, your one confirmation tool to tell you it's okay to go short. Or if you were thinking about going long, maybe you would have stayed on the sidelines until, the pet D turned green. But you see how simple it is to trade once you are in sync with the trend. As we stated here, this is where you find these high probability setups when you're in sync with the trend. Now we can also apply this to commodities. Here's an older chart of crude oil, just going back last month. As we see here, this is an hourly chart of crude oil. Someone looking at this chart would say, well, on an hourly chart, we're just kind of going sideways. There's no trend here, so I'm going to kind of stay on the sidelines. Well, if we add the pet D, we see here for the last 5 or 6 hours, we've actually been in an uptrend. We were in a downtrend here, but at this point, we turned into all green bars. So we're actually in an uptrend. You shouldn't be on the sidelines. You should be looking for the inside day bar pattern, and there's 2 of them right here. So this was telling you that crude oil on an hourly time frame is most likely going higher. The market is trying to tell you that it wants to go higher. The translator we have is the pet D. So if we would have listened to the translator, we would have purchased using these 2 entry techniques, and look what happened. Okay. We didn't listen to any news. We don't know what's going on with crude oil. We don't follow anything fundamental. The only thing we listen to is the thing that you should be basing all of your trades off of, and that's the market. How about the E-mini? All right, we know not everyone trades stocks or commodities. Let's look at the E-mini, and once again, let's look at a daily chart in October. Remember, we had said that October, the market kept going higher and higher. People kept shorting into it or waiting for it to crash. We knew that the entire month of October, the bars were green. So what are we going to do? Look for that inside day bar pattern. That's all we're doing. Okay? Now, if we don't trade the daily bars, we can go down to a 60-minute time frame. Someone looking at this would say, well, Steve, I see that inside day bar pattern here, but are we in a downtrend yet? We were only looking at about 4 or 5 bars. How do I know we're in a downtrend on a 60-minute time frame? Well, we add the pet D. And the pet D, the last 3 bars have been green, but the only thing we're looking at are the 2 bars of this 2-bar pattern. And they fit the requirements. So you could have sold right here on this inside day bar pattern and holding your position into the next day. That was 20 points or $1,000 per contract going into the next day. Okay? Remember, there's obviously some news or something happening that made the market go lower. There's always a reason. There's always some way to justify it. We don't care about that. That will only serve to confuse you and to complicate your trading. Keep your trading simple. Remember, I told you, I used to trade like everybody else. I had tons of indicators. I looked at every news event. I knew what was going on economically. I was looking at the money supply. That's what we used to look at years ago. But we also looked at volume. We also had a ton of market gurus, Prechter, and a lot of people were looking at support and resistance and GAN and all these different things, and couldn't make any money off of it. It was too complicated. Our trading was way too complicated. My mentors took me aside and said, Steve, get rid of all that stuff. It's not going to help you become more successful. Just as if you were buying the most expensive pair of running shoes is not going to make you a world-class sprinter. It doesn't work that way. You've got to put the work in and learn how to listen to the market. So get rid of all that useless noise and just listen to what the market wants to do. And so once I learned how to listen to the market, and then they taught me how to calculate the PET D, I saw that it was so easy. You just want to find out what the market wants to do and then jump on board. Now let me show you what happened today, all right? Just to show you that I'm not sharing all winning scenarios that happened, a month or 2 ago. This is what happened this morning. If you're an intraday trader of the E-mini, we know now, looking back in hindsight on this 10-minute time frame, that the market was going higher just about all day long, okay? It's easy to see that right now in hindsight, but how do we know off of the very first 10 or 30 minutes that we were going higher? After all, we gapped up higher and then started to sell off. A lot of traders that I talked to during the day were saying that we most likely topped out and we're going to head lower. When I told them I'm just following the PET D, and on an intraday time frame, the PET D is green, so we're not going to sell until the PET D turns red. And it was a good thing because the market kept going higher and higher until I took this snapshot just about 15 minutes before the close. So if we use the technique I taught you today, looking at that 2-bar pattern, we can only trade it in sync with the trend. I know a lot of people use this inside day bar pattern as a type of reversal tool, and it doesn't work that way. You have to only trade it in sync with the trend, and the best way to find the trend is by applying the PET D. So if the PET D is green, we just need to find 2 green inside day bars, and right here in the first half hour of the day, that was your signal to buy. And you could have purchased it, and if you were lucky enough to hold on for the remainder of the day, that would have just given you about 16 points or $800 per contract. If you trade 10 contracts, that's $8,000. Just because we're in sync with the market and we're structuring our entry based off of a 2-bar pattern. That's it. Trading doesn't have to be more complicated than that. We don't have to look at news. We don't have to look at support and resistance levels or institutions. Why overcomplicate your trading? Now, a lot of people say, well, gosh, Steve, a lot of times I'll miss the first move. The beauty of this technique I'm sharing with you today is it's okay. Many times if you miss the first one, there's a lot more along the way. Look at all the second, third, fourth, fifth chances the market gave you to get back in. Now, we can lastly apply this to the Forex markets. I know there are some currency pair traders out there that love to use this technique. Same rules apply. We want to apply the PET D. Now, if we look here on this weekly chart, in hindsight, easy to see that the Australian dollar has been in a downtrend. But how did we know as far back, way back here in, I believe this is 2014, that we were going lower? Well, all you have to do is apply the PET D, and we already knew that all the bars were turning red. So once the bars are red, we just look for those inside day bar patterns. There were 2 right here, and look at the downward move that happened on this weekly basis. These are weekly bars. Same rules, same technique applies. And we can go one step high or one step lower. So I say we can go to a 60-minute chart once again. This is a Canadian dollar. We are obviously in an uptrend, but we knew we were in an uptrend way back here because all the bars were green. So as early as that point, all we had to do was start looking for inside days on a 60-minute time frame, and look at all the chances we had to go long the Canadian dollar. Now, a lot of people always say, well, Steve, where do we exit? Where do we get out? Where do we, place our stops? What if we're wrong? Because I'm not going to tell you that every trade works all the time. Sometimes you will get stopped out with a minor loss. But let's just say you had purchased right here on the very first one, okay? You've got a nice profit you're holding on. And what a lot of students like to do is they just try to watch and wait for the trend to change, and then they reverse. So at this point, things are going well, but then you're met with red bars. So it's telling you that the trend has changed. So you could actually exit your position for a profit, or you could wait for another setup and you would just simply stop and reverse. At this point right here, you would sell what you had purchased back here, and now you would go short, and look what happened. Okay? These were actual setups in the Canadian dollar just a short while ago on a 60-minute time frame. But you see them on daily bars, you see them on stocks, on E-mini futures. It's the same patterns. It's just market behavior that repeats itself over and over. The problem is that we're not trading this way. I was trained to pick tops and to pick bottoms, okay? So I was always trying to sell somewhere here, and once it went higher and I got stopped out, I'd get out, and then it would come down lower, and I'd say, boy, I missed it. But now I'm going to start buying because it's got a, here's some support, some Fibonacci retracement, so I'll buy right here, and then I'd lose as it went even lower. It's just a recipe for disaster, trying to pick tops and bottoms. Sure, those types of techniques will work every once in a while, but most likely you'll win and then you'll lose and give everything back. There's no consistency in that. The best and highest probability setups are when you are in sync with the trend. Now, here's the best thing about the PET D. We've shown you, day trading, we've shown you intraday trading, we've shown you swing trading, but you can also apply it long term. That's the beauty of the PET D because it works in any market, any time frame, any direction. Let's look at this monthly chart of the S&P 500 index going back 20 years. You see back here to 1995. Now, we rallied tremendously from 1995 to 2000 until we hit the dot-com bubble right here, and then we crashed and fell much lower down to 2003. Then we firmed up and flirted with the highs again until we met the banking and financial crisis, and that's where we had the great crash here, 2007, 2008. But then since 2009, we've been going higher, and we continue to go higher, but who knows when it's going to end? Well, we really feel that we have an edge with the PET D because look at the PET D, how it clearly defined all of these nice upward moves until we had an abundance of red bars signaling a downward trend, and then when we have an abundance of green bars, we have an upward move. Okay, sure, we had a splash of red every once in a while. As you see here, even on the way up, we had 1 or 2 red bars. But in order to really see that we're going to change trend, the rule of thumb is you need about 3 bars to tell you that on a long-term basis that you've changed trend. So far, we haven't had 3 red bars yet. We've had 2 here in August and September, but then we quickly went up in October and November. But when will the next 3 bars occur, telling you that you should most likely exit the market for the next 3 to 5 years, the same way they told us back here? Well, if you have the PET-D, you'll be able to find out. So let's recap. We shared with you a simple trading technique that, used with the PET-D, it pinpoints quick momentum moves in any direction and any time frame. Remember, our job as traders is just to follow 2 rules. Rule number 1 is we want to simply listen to the market and find out what the market wants to do. Rule number 2 is once we find out what the market wants to do, we just jump on board. We just ride its coattails. All right, that's it. Now, I share with you some structure on how to jump on board. The only trouble is most people don't know how to find out and listen to what the market wants to do. Most people think they do. They'll listen to news and say, well, you know, the news is very good about this stock or about the economy, so that's telling me that the market wants to go higher. No, that's your interpretation of the news telling you that the market wants to go higher. Or let's say it's some convoluted indicator or something based off the institutions or volume, and say, well, there's heavy volume here to the downside. That's telling me that the market wants to go lower. No, that's the volume. That's your interpretation of what the volume is telling you. The market is not saying that. See, there are certain things that the market uses and employs to translate what it wants to do. And let me just tell you, out of 38 years, institutions, volumes, tons of indicators, news, most likely news, and gurus do not properly translate what the market wants to do, myself included. I can't tell you what the market's going to do. I don't know. I simply listen to it and jump on board. So in order to trade in sync with the market, we need a tool that will tell us in advance of other tools when the trend is most likely going to change. This is the PET-D. This is what we're offering you today. It's our roadmap for any market. This is the special we're having for all the attendees today. The Primo Early Trend Detector, or the PET-D. It's a proprietary color bar algorithm. Now, with this course, it includes not only the add-on that will change your bars from red to green, but it comes with 2 continuation trading techniques, 2 pullback trading techniques, plus a trailing stop technique. Remember, this can be applied to any market, any time frame, any strategy, and any direction. Included with this course comes lifetime correspondence with myself. So you can contact me whenever you'd like. If you're thinking of a way to trade with the PET-D, or if you want some guidance how to apply it, I'm there with you every step of the way. You can contact me whenever you'd like through email. We can correspond, and I can share with you my experience on using the PET-D for nearly 40 years now. Now, here's the offer we're giving you. We know that a lot of you have had a really difficult 2015. Many of you started out 2015 with all these hopes and aspirations about how you wanted to conclude the year. Well, we're concluding the year, and I can almost guarantee that the majority of you are nowhere near where you hoped you had been at the beginning of 2015. Here's your chance to start out 2016 and be consistent, and then look back at the end of 2016 and say, boy, I'm so glad I got in sync with the market with the PET-D. All right, here's what we're going to offer you today. Now, before we go in, I just want to show you one last example. I know a lot of you are probably saying, well, I don't really need the PET-D because I can just basically look at a stock and I just know, or a market, intraday, currency pairs, futures, I know when we're in a trend, so I can just apply this 2-bar technique and I'll be doing great. You know, it's as simple as that. Well, let's look at this example here. Let me show you how difficult it really is. Just looking at this, someone would say, well, obviously we must be in a downtrend. Okay, we're making lower highs, lower lows, and we're probably below some major indicators. They've crossed, you know, the moving averages. So obviously, from hindsight here, we must be in a downtrend. And then lo and behold, if you think you're in a downtrend, what do you look for? You look for those inside day bar patterns, and here's one. So you think, boy, this is what Steve was talking about last week. I'm going to short this. This must mean the beginning of a really strong downward move. After all, that's the way he explained it, right? You have to trade this in sync with the trend. All right, so you sell, and look what happens, okay? Well, why didn't it work? We're in a downtrend, according to all the stuff I've been taught, right? But you weren't listening to the market, because remember, you're listening to indicators or convoluted logic or techniques that really have no consistency in them. If you had simply applied the PET-D, remember, we needed both of these bars to be red. If we applied the PET-D, What color are these bars? The first one is red, but the second one is green. So the second one was already giving you a warning that we're most likely going to be headed higher. So you never would have taken this setup. You would have only used this as an indication that most likely the trend may be changing. And then while we changed to all green bars, well, look at all the setups you could have had. So if you had used your own technique for the trend, you most likely would have lost taking this trade. But if you waited for the pet D, well, you would have had nothing but winning trades. So here's the end of the year special to get you on track to trading in sync with the trend and looking for those high probability trade setups. We're offering you the attendee discount of $14.95 down plus a $97 per month small payment. That's all you need for a limited time only before we raise prices to get on board with the Pet D. Now, I know a lot of you would rather just say, well, listen, I don't want to pay a down payment. I'm ready just to do this for a lifetime. So we have payment plans for a lifetime of $29.95. Nothing will ever change. The Pet D will be yours forever, okay? And you will have lifetime correspondence. So this is a great, great deal to get your trading on track. Remember, we have payment plans for a limited time only to set up this deal. So this is how to use probably one of our most popular and consistent trading techniques, something I've been using for nearly 40 years, the Pet D. It's just simply a color bar tool that is designed to get you in sync with the trend. So here's how to take advantage of this great, great end of year special. Go to my sister site, which is Pro Trader Strategies. You see the way to email them there at trading@Pro-Trader Strategies. You want to contact them and schedule some type of a payment plan. You can call them directly at area code 310-598-6677. But if you're already set to go and you want to be my personal student in just a matter of moments, all you have to do is copy and paste the link you see at the very bottom there, and that will automatically take you to the sign-up page. But that link you see at the bottom is not live, so if you go to the chat box on your far right there, you'll see a live link that they've posted. Simply click that on, and that will take you to the sign-up page, and you can be up and running in a matter of minutes, and you'll be my student. You can converse with me and correspond with me ASAP. Okay, I'm going to leave this information up while I open up the question and answer box. I know a lot of you may have had some questions, and I thank you for waiting. Let me just see if I can answer them right now. Someone is asking, what exactly is the Pet D? Is it a program? The Pet D, remember, is a proprietary tool. We're not disclosing what it's based off of because it's a proprietary formula. We've had hedge fund traders who wanted to license this out. It's that valuable of a tool. We just simply don't want to give the rules away because we know that it's so valuable that people will probably be posting it up online or in chat rooms and then giving it away for free. This is an extremely, extremely important tool based off of momentum. That's all I can tell you. Now, when I first learned this nearly 40 years ago, I had to calculate it by hand. So it's not difficult, but it's something that, you know, at the time, 40 years ago, we could only use it for daily bars. But what we've done with Pro Trader Strategies with programmers and high-speed computers is that we've put together an algorithm as a color bar algorithm. So now you don't have to calculate anything. It's automatically there for you simply by changing the color of the bars from red to green. Okay? But it's based off of momentum. That's about all I can share with you. Now, I know a lot of people on the internet and people I've talked to have said, well, Steve, I know what it is. It's based off of this and that and that. And so far, no one has gotten it right. You know, everyone thinks they know what the Pet D is, but no one has really gotten it right. But you know what? Even if someone did figure out what the Pet D was, it would not matter because the beauty and the secret of the Pet D is in knowing the correct way to apply it. Most people will think the Pet D is a trading system. It's not. It's just a very finely tuned trend identifier. But you have to know how to use it correctly. So this is what we teach you in the course and with my mentorship. So even if you knew the exact rules, I can almost guarantee, and you formatted yourself on your own screen, you would most likely lose money because you wouldn't know how to use it correctly. And you'd say, this doesn't work at all. But what you're getting is 38 years of experience. You're not just getting a color-coded algorithm. You're getting 38 years of experience of someone who's used it, who can show you how to use it properly. That's the beauty of the Pet D, okay? So that's, if you're asking how it changes based off of momentum. Let's see, Nick is saying, Steve, I use the 15-minute simple moving average or the 15 EMA for short-term trading. Does the PET D use either of these indicators? Because if it does not make sense to purchase something it already uses. No, first of all, the PET D doesn't use any standard indicators like moving averages. So it's not based on moving averages. So the point is, we show you how to use the PET D with moving averages. So there's no reason to worry about what you're using. It doesn't matter, once again, even if you know what it's based off of. What matters is if you know how to use it correctly. So I can guarantee you it's not based off any of those tools, but even if it were, it wouldn't matter. The point is you're having an instructor teach you how to use it correctly, someone who's applied it for nearly 40 years. That's what you're really getting in this course, nearly 40 years of experience in how to trade it. Ken is asking, where do you place your stop or two on the bar patterns? Well, remember, Ken, we teach you this in the course. All I taught you was a high probability setup, okay? But this is, just an entry technique. If you want to learn where stop placement is, exit points, advanced entries, advanced exit points, advanced stop placements, that's all included in our courses, okay? Gunter asks, what platform can we use this for? Good question, Gunter. You can apply this to TradeStation, Metastock, NinjaTrader, MT4, Sierra charts. Let's see, I know you can use it for Thinkorswim, but Thinkorswim users will have to just make some minor changes. You can use the data for Thinkorswim and then apply it to a free NinjaTrader platform, which we provide you with and we set you up with. We have a great tech support department that will do that for you for free, and they'll have you up and running in just a matter of moments. So you can still be looking at Thinkorswim, and at the same time you'll have a NinjaTrader platform, and that will give you all the PET D colors on it, okay? Niti is asking, well, how do we use it? Can it be used with any brokers? Well, I show you how, this is what the course is. We show you how to use it. But remember, it's a trend identifier, and then you can apply any strategy. As I said just a few minutes ago, you can apply any strategy, any system, or any trading technique to it, as long as you're in sync with the trend. So in other words, if the bars are green, and let's say your strategy generates a sell signal, well, the PET D is telling you, don't take that sell signal. Why? Because the market is screaming that it's going higher, most likely. This is why most traders fail. Their strategies or their systems are out of sync with what the market wants to do. Now, the PET D is translating what the market wants to do. So why would you go against that? In other words, why would you want to swim upstream when you can swim downstream and have the current at your back? That's what the PET D does for you. Look at your last trades. Most likely it's because you're out of sync with what the market wants to do. If you lost, if you bought something and it immediately went lower, all right, well, it's because the market was telling you it wanted to go lower. But your system of strategy was betting that the market wanted to go higher, so it was based on faulty information. The beauty of the PET D is that we show you how to use it because it's telling you what the market wants to do, okay? Daniel is asking, can you please repeat the price? Yes, well, the price is, let me just go back to that page once more. Here's our special because the price will be going up in 2016, okay? Now, if you want to protect yourself against any price rises, because it's that popular of a tool, if you've looked at any of our presentations before, you see how popular that tool is. You can purchase the lifetime access for $29.95, all right? But if you want to just get in at a very cheap discount, what we've done is we've have a small deposit of $14.95 down and then $97 per month. And this is going to be for a limited time because most likely the price is going to increase in 2016. You can call up Pro Trader Strategies. They can set some type of payment plan together for you, and you can be up and running rather quickly. So that would be probably the best thing to do, okay? Nick is asking, for the inside bar, does it matter whether the bars close upper 75% or lower 75%? No, Nick, with this particular pattern, we're not looking for closes. We're only looking for high and low ranges because the inside day bar tells you in the title, we're looking for an inside pattern. We're not concerned with where the close is. Now, if you find a little bit higher consistency based on where the close is, that's fine. Remember, you're in charge of your trading. These are not systems. We do not teach or trade systems. If you want to add something that keeps the basic format in place, but you're just adding a little something that you feel will increase your odds, that's great. We encourage that. We want you to make your own trading decisions. We do not, teach and trade systems that say, no, no, you must trade the exact same way each and every time. Even if the last 10 trades have lost, you're going to still buy this next one. We don't believe in that. We want you to be a part of the process and have some type of input. That's the only way I have seen in 38 years how traders become consistent, by being in charge of their own trading and making their own trading decisions, okay? Let's see, Peter is asking, hi Steve, just purchased the Pet D. Well, thank you, Peter, thank you so much. He says, on the installation videos, it seems to show that the coloring a lot different than what it looks like on your charts. I tried it on NT4. What platform are you using? And is it possible to get the visuals as the ones that I'm using? Well, I use the examples I use because of the presentation format is TradeStation. Now, it may be a little bit different with the colors on MT4, but I would contact your Pro Trader Strategies consultant, the person that you purchased the program through, and they can put you in contact with our tech support. Maybe they can help you with the colors, okay? But it shouldn't be that difficult to reformat your colors. But even if they can't, I'm not really sure because I don't use MT4, but even if they can't, you'll get used to it. Remember, it's just the colors are just telling you what the market wants to do, okay? Let's see. Nick says, for the Pet D strategy, does the technique show you where to take your profit? No, Nick, because once again, as I stated just a little bit ago, the Pet D is not a strategy. Remember, it does not tell you where to enter. It does not tell you where to exit. Strategies do that. The Pet D stands for the Primo early trend detector. Trends do not tell you where to exit and where to enter. Strategies and structure do that. Now, we teach you these in the courses, but the Pet D is just a fine-tuned trend identifier, okay? And with a bit of experience, you should know where to enter and exit on a trade. But remember, once again, through my mentoring, I share with you different techniques on how to do that. Okay, just time for a few more questions here. Now remember, I know we're coming to the end of the year here. You've heard me say this before many times, but as you come to the end of the year, ask yourself, and ask yourself honestly, are you anywhere near you thought you'd be at the beginning of 2015? Okay, really be honest with yourself. I'm almost certain that the majority of you are still struggling. And that's okay, because I was in the same boat. When I first started trading, I was on the floor. I had this access to qualified information that no one else had. I knew where the orders were in my book. I was making markets. And guess what? Even with all this information and privilege, I couldn't make a dime. So don't feel in any way as if you're lesser than other traders, because I was on the floor and I was still struggling. It wasn't until my mentors taught me these same things that I teach in my courses that I was able to finally sustain my trading. And this is what has given me the longevity for close to 40 years now. So this is all I want to do with you. I want to teach you and mentor you in the same things that were able to turn my trading around. Now, speaking from you sincerely and honestly, the Pet D is one of the best things that can do that. It can really get you in sync, because most of the time traders fail is because they are out of sync with what the market wants to do. I mean, just look at it. If you're buying something and it goes the wrong direction, it's because you were out of sync with what the market wanted to do. It was that simple. And if you sold something and it continued to go higher, you were out of sync with what the market wanted to do. Wouldn't it be nice if you knew how to be in sync with the market? That's what the Pet D does. So if you've lost a lot in this past year or even in the years prior to that, the Pet D will give you a roadmap to what the market wants to do, and you will increase your odds for success. So if you really want to start out 2016 on the right track and have someone there with you every step of the way, all right, not someone where we just sell you a product and say, good luck, just watch the video and good luck with it. No, someone who is there to correspond with you to make sure that you're using it correctly, that you have any questions, that they're quickly and honestly answered. Here is the product for you. It's the Pet D. It's something I use on a daily basis, something that was able to sustain my trading, and I really feel confidently that it will be able to sustain your trading as well. Okay, so there's the information in front of you. Contact Pro Trader Strategies if you want to take advantage of that brief and limited special that we're having. But remember, the price will most likely go up in 2016, and so talk to them. You can even structure some type of payment plan. Okay. In closing, I hope that you enjoyed this presentation. I hope you got something out of it. As you take one last look at our disclaimer here, I wish you the best of luck of trading, and I hope that all of you become students of mine in 2016 and in the Pet D course. Thank you so much. We'll see you next time. Bye-bye.